Something big is happening deep within the technology supply chain, but most investors aren't paying attention. We are talking about the critical need for speed and reliability in the next wave of global innovation. Everything from autonomous vehicles and advanced defense systems to industrial robotics. When a computer can't afford to fail, what kind of memory does it use? And is the company that makes that essential component quietly positioned for a long-term benefit? Most investors are focused on massive cloud giants or consumer tech, but they don't realize that a specialized, highly profitable niche is emerging. This company operates in the semiconductor space, yet it avoids the hyper-cyclical consumer gadget market. Instead, it serves sectors where a single memory failure could be catastrophic. We're looking at a mature company with product growth, but its recent quarterly profit dropped sharply. Is that a massive red flag or just a temporary accounting twist hiding underlying strength? By the end of this deep dive, you will understand exactly what this company's cutting-edge memory technology is, why high-reliability industries are adopting it, and what the latest financial highlights, including that steep drop in net income, really mean for its long-term outlook, balancing both its competitive strengths and its core risks. Before we dive in, please remember this video is for educational and informational purposes only. Nothing here is investment advice, financial guidance, or a recommendation to buy or sell any security. We are analyzing publicly available data. Always do your own research before making investment decisions. If you find this factual, analytical coverage helpful, please take a second to hit the like button right now, share it with a friend, and also subscribe. Please help us get at least 500 likes. It really helps support the channel and keeps us bringing you these deep market insights. The company we are breaking down today is Everspin Technologies, ticker MRAM, a United States-based technology company operating at the forefront of the specialized semiconductor memory market. Fundamentally, Everspin makes memory that doesn't forget, is lightning fast, and can withstand conditions that would fry conventional chips. Everspin plays in the semiconductor memory industry, specifically pioneering MRAM, or magneto-resistive random access memory. Why does this matter now? Industries are demanding memory that is both non-volatile, it holds data even when power is lost, and fast, like conventional RAM. Think about an autonomous car needing to instantly save critical sensor data during a power surge, or a defense system requiring fail-proof data logging. Traditional memory often fails in harsh environments or wears out quickly from constant writing. MRAM solves this crucial problem, making it essential for the increasing complexity of aerospace, defense, automotive electronics, and industrial robotics. Everspin's main product line is MRAM. The key competitive advantage is its use of magnetism, not electric charge, to store data. This gives it practically infinite endurance, speed, and high resistance to heat and radiation. A significant milestone is their ongoing expansion of the Persist MRAM family, which specifically targets those high-reliability markets where mission-critical performance is non-negotiable. Let's break down the recent Q3 2025 results slowly and analyze the figures. Revenue. Total revenue was $14.1 million. This is a $2 million increase compared to the same quarter last year. This strong growth shows that the demand for their MRAM solutions is solid, and their core markets are continuing to adopt their product. Product sales. MRAM product sales rose by $2.3 million year over year. This is critical, as product revenue is typically more predictable than licensing. Demand appears to be accelerating in industrial and defense systems. Gross margin. This improved to 51.3%, up from 49.2%. Crossing the 50% threshold is a positive sign, indicating stronger efficiency, likely from a better product mix and cost structure improvements. Operating expenses. These increased slightly to $8.8 million, up $700,000. This isn't concerning. It's consistent with a growing company investing more in R&D for new MRAM generations and expanding sales for new products. Net income. GAAP net income dropped sharply to just $54,000 from $2.3 million last year. This is the figure that requires interpretation. The drop was almost entirely due to a significant decrease in interest and other income, which was unsustainably high last year. It simply means they didn't have the same one-time investment gains in 2025. The underlying operating business remained stable. Cash. The company's cash position is a powerful strength, $45.3 million, up $3.2 million since the end of the previous year. For a semiconductor company, this strong cash reserve is essential to fund R&D and weather industry cycles without external debt. A professional analysis must be balanced. What are Everspin's core risks? First, licensing revenue remains a factor. It often fluctuates based on contract timing, which can create volatility in quarterly earnings. Second, despite their niche, the semiconductor industry is cyclical and sensitive to global supply chain disruptions. Third, they face competition, not just from new memory standards, but from entrenched, lower-cost traditional memory solutions like flash and conventional RAM. Finally, the sharp net income drop, even if driven by non-operating income, will put pressure on the stock price and management's narrative until the market fully grasps the underlying cause. Turning to the long-term opportunity, Everspin is deeply integrating its technology into high-growth areas. They recently announced a critical collaboration with Lattice Semiconductor, a leader in FPGA, field programmable array solutions. Pairing MRAM with FPGAs creates a powerful combination for advanced electronics. They are also partnering on RISC-V solutions, an architecture rapidly expanding, especially within the automotive microcontroller segment. These partnerships and expansions signal that their growth is tied to the expansion of new computing platforms, positioning them for continued strong adoption in sectors where reliability is paramount. So, as an investor, you have to ask, does your risk tolerance align with a niche semiconductor company that is profitable but whose bottom line can be volatile due to non-operating income? Are you looking for stability and steady product growth in mission-critical applications, or are you looking for a faster-paced, consumer-driven growth story? This is a case where the balance sheet, cash, and gross margin tells a more important story than the recent net income headline. In conclusion, Everspin is a leader in a specialized, high-margin, and highly necessary field, MRAM. The company is generating solid product growth, has excellent margins, and holds a strong cash position. While the recent net income figure was concerning, it was largely attributable to a one-time accounting fluctuation. Everspin remains a key enabler for high-reliability systems and is definitely worth watching as MRAM adoption expands into new platforms like RISC-V and FPGA. Once again, this is not financial advice. Always do your own thorough research before making any investment decision. If you enjoyed this factual, analytical breakdown, please show your support by liking this video, dropping a comment below, and subscribing to the channel for more deep dive market insights. Thanks for watching, and I'll see you in the next one.